Today I'm gonna talk about one of the most famous indicators in the world, RSI. So I'm gonna come here, indicators. I'm gonna search to RSI, Relative Strength Index. This indicator is maybe 80 years old. And the way this indicator works is basically it detects, I'm gonna close here, MACD. So as you can see, the indicator have two lines, one in the 20 and one in the 80, or sometimes it's 70-30. This one is a 70-30, and basically this indicator tries to tell you if the market go below the 27 and then go inside again, it means the market is oversold. If the market goes above the 70 and then backs in, you should short because the market is overbought. So basically what this indicator is trying to do is it's trying to catch a reversal. So basically this indicator want to profit in this small area here, because most of the time the trend will continue going in the previous direction. So basically what this indicator will do is get out here, for example, and then go in, and then you're going to try to profit in this small area here. In my opinion, this is not good, and I'm going to show you why. First of all, we are talking about Forex, not stocks. And Forex is currency. So USD, Japanese yen. How these can be overbought or oversold? This is currency. A currency can go maybe 2,000 pips, 20,000 pips in this one direction without stopping. Because what makes a currency stop to bleed is the central banks acting. So it's not the same as stocks. Maybe Facebook stock, maybe it cost $100, let's say. And you look to Facebook stock and you say, nah, it's overbought. I think the real value is $80. This can happen maybe here because a lot of people get pumped and start to buy, and the stock go up, and the company have a real value and you know the value, but sometimes the stock value is don't match the real value. But a currency is completely different. It can go in one direction or other direction for thousands and thousands of pips. So there is no such a thing of overbought and oversold. So you should avoid to use these kind of indicators that give you these hints of overbought and oversold. And to be honest, you should avoid to trade reversals. It's much easier to follow the trend and go here, for example, than try to be smart and it's gonna go down here for sure because it went up so much. You never know when it is the top, and maybe you're gonna get stopped, and maybe it go down after. But in Forex, overbought and oversold is something that don't exist. So guys, if you like, please don't forget to let the like and subscribe. See you.
Since I subscribed to Carlos Branco channel, I started to get the ladies.